Support for Short Stops is presented by the Caylum Trading Institute. Check out our website at www.cayluminstitute.com. On today's episode,
since coming back from New Year, the phrase I've heard most is melt up. I think that is what people are, there's been a strong start to the year and there are good reasons for that.
Unless you really assume an overvaluation, a true melt up. And I think this is an important point I'm trying to make to our clients, which is, look, I'm on board for what's happening right now. We've been bullish all year on this. I think a lot of it's gotten priced at this point. I'm not nearly as bullish at the time as I was last year.
call it what you want, a game, an experiment, a gamble. But stock trading in the global financial markets to us is a business. Every day you're surrounded by the noise. Buy, sell, hold, buy more. And we're going to quiet it down and filter out the best trading strategies, tips, and stock picks. You want information on how to find your next bagger or home run? You'll find it right here on Short Stops.
All right, guys, welcome back to episode 3 of Short Stops. With me again is Mr. Bryan Gomez.
Hello, guys.
And now we have a special guest for today, our head of research from Caylum Trading Institute, Mr. Zarr Pacificador.
Hello, guys. Nice to be here.
Few things we're going to be touching about today. First is on the gaming industry, which is perhaps the strongest sector for 2018. And maybe Zarr, you have a better input on this.
Oh, well, as you know, last year, gaming was one of the best performers. If you know the history, I think gaming had a difficult last 3 years. But last year, it returned to growth. And we think that this year, it's going to continue growing due to number of catalysts.
And what are these catalysts?
Well, one is the tax reform. It will enable to increase disposable income. So, in effect, it's result in increased consumption. So, it will benefit the gaming sector as well.
So one of the biggest drivers last year was the incoming tourists from China. And how has that played out for the casino stocks?
Well, for the casino stocks, actually the VIP segment, a huge portion of the revenues come from these customers. So last year, I think around 33% growth in Chinese tourists, plus improved relations with China. They're expecting continued growth this year. And also, what happened was last year, the driver for the VIP segment, it was the ban in the proxy betting in Macau. What happened was, in these countries, they banned proxy betting, so these customers came to the Philippines. Specifically, Bloom and MRP was able to capitalize on this, unlike RWM, who didn't allow proxy betting.
One of the biggest concerns, though, is that you've had Melco come aboard. I mean, they initially started as 2 casinos from Resorts World and Solaire. Now they added Melco. How many more do you think the market can actually take? I mean, we've had news that Galaxy might come in, partner with LR, and maybe construct a casino in Boracay. And there are other news that Dennis O is building one in Cebu. And so there's a lot of news that's coming out about how people are bringing in so much supply. And what's your thoughts on that one?
Well, there's certainly a concern, but if you remember 2 years ago, they were also concerned about Okada coming in and increasing competition. But what happened was, when Okada came in, there was a clustering effect. So it brought in other players into the Philippine gaming market. So for now, I think it's positive because it means that the market is growing. But according to, I think Credit Suisse, they estimate that the gaming market is going to grow to 300 billion revenues this year.
So you think there's enough space for everyone to benefit from all of this?
I think so.
Got it. So what's your favorite pick from the entire gaming sector?
One thing again for the gaming sector, it's the valuations are attractive. Well, if they're able to sustain their growth, for example, Bloom is trading around, I think around 9 times EV/EBITDA, and MRP is around 7 times EV/EBITDA. So that's pretty cheap compared to the regional average of around, I think, 12 to 13. So for me, I like both, but since I like cheap companies, so I go with MRP. But Bloom is the one actually that's growing faster.
Great. Okay. Anything else to add, Ryan?
I'm going to buy MRP. Based on what he said.
Okay. 2018 has been a fantastic year. We've hit 9,000 from the index last week. And there's a thing that we hear a lot nowadays. It's called melt up. Brian, why don't you describe to us what melt up actually means?
Melt up is actually an invented word by the media, coined close to the phrase meltdown. So that was a term. Physically, nuclear reactors melting down, causing catastrophic effects on the environment. And also, you can say psychologically, if somebody is melting down, a person freaks out because of the overwhelming situation. He couldn't handle his emotions. Financially, in the markets, as a technical term, it is very close to the word markup, where there is new money. People are sometimes seen over leveraging, suspecting that there will be a dramatic change or positive change in the economy. Psychologically, the term is very close to somehow a physical manifestation of FOMO, or what we call the fear of missing out. So it's like saying that you are putting your money where your feelings are. So when you feel aggressive, they buy aggressively the stocks, diba?
And so what's your advice?
There's really no problem with it, but just as long as they manage their risk and not plow everything into the market. Sometimes you'll hear them say, "Oh, it is very clear that this market will not go down, and we better buy everything that we can in the market." But what happens next is, from my experience, is a very disastrous outcome. But that doesn't mean that they will not participate in the market. They just have to manage risk,
Exposure.
exposure.
So just to summarize, I think the important part about melt up is that it could always go higher, right? And this feelings of being able to see huge price swings, the only thing that we can only do is just manage how much we put in, how much we're exposed, and understand the risks that are involved.
Yes,
at the end
true,
of the day.
yes, true. Not succumb to the market's irrational exuberance.
But
as
it's
they
tough.
say.
It's tough.
Yeah, it's
we-
really tough. Yeah, especially for me, that's very vulnerable to those things.
Zarr,
Yeah.
what do you think about this market?
Well, the current market, obviously, valuations are high. But I mean, like, because it's so bullish, economic fundamentals are doing well. The economy's, like, recently, the GDP growth was below estimates slightly, but still, this was good news. We need to see corporate profits grow this year significantly to support the valuations. But I think the market right now is around, I think it's 19 times forward PE. So you could say it's expensive, but doesn't mean it's not going to go higher because of the bullishness and optimism.
Okay, so two things. We talked about melt up, and Zarr, you talked about how it's slightly expensive in terms of valuations. At what point would you see profit taking come in? Or at what point would you consider buying back into the market?
Well, I think the problem now is trying to find issues that still upside, because a lot of issues, they're either at best fair valued already. Well, the problem with the investors right now is because they weren't able to come in when it went up. They're trying to catch up. So the early comers are going to profit take, and the late comers will panic sell.
Yes. And there are a lot of reasons to sell, actually. As you said, prices are overvalued, the market is overbought.
So there's some form of skepticism. So if you're invested in the market, would you just tell them to hold and not add? And just wait for this, maybe you'll see a buying opportunity and then you add?
Well, for me, I think if you weren't able to buy at more sensible prices, I think it's just prudent to hold.
And just wait for a buying opportunity.
Yeah,
and
just
then
wait for a correction since the economy is strong. So the long-term fundamentals of the Philippines still intact. So any correction is an opportunity to buy your favorite issues.
It also depends on your objective. I think if you're a trader, I think most of the traders listening now, I think it's their time now to really participate in this market, especially if they see their setups, take advantage for the shorter period, diba?
Yeah.
They can scalp the market now. For investors, I think most of them are already in the market. I think these are levels that they can scale out probably.
And if you can't really help it, there are, like, you have to do better stock picking. So there are other issues.
in fact, there's a
Yeah.
saying that usually the foreigners always come in late,
Yeah.
right? And we've seen a huge amount of foreign buying influx coming into the past month. Don't you think that these are signs?
If you combine what the valuations tell us now with valuations of the market tell us now, and what you're saying, the hot money that's coming in, the effect of that is prices can move faster within a shorter period of time, and that's what we call prices going through magnitude. And I think investors or traders should be able to capitalize on those kinds of movements.
Capitalize in terms of selling, or
Selling some of their positions. What happens with that is that they'll be able to take profits at the same time protect their capital.
If you're not in the market, then just stay out of the market, or just invest around 50%. And if you're already invested from like way before, maybe it's a chance to just hold on to your shares and profit from or take advantage of the bullish sentiment.
I mean, personally, if you ask me what my thoughts are, I honestly think that what we're going through is a melt up, and a lot of people are feeling that anxiety to be able to participate in the market. I do agree with both of you that valuations are a concern, but I also see there's some opportunities, some small opportunities still in the market. And I feel that going forward, especially in the next near term, when I talk about near term, maybe in the next few weeks to a month, I expect to see a lot of more rotation happening to whether it's on the undervalued and to the smaller cap issues. That has been playing out so far. So in fact, if you look at consumer infrastructure, they have been leading the pack this year. And I still expect them to continue going forward. Okay, so that's a wrap. Thank you guys for listening. I'll see you guys again next week, here again in Short Stops.